As investors grab the bull by the horn, should they be afraid of a doom loop? All that and more on Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. The moving average, these are the colors on your screen. The 21 days in red, the 50 days in green, the 100 days in blue, and the 200 days in tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Let's take a look at the percentage of S&P 500 stocks above their 50-day moving average. Now, if you want to know, if you're a short-term trader, if you want to know where to be looking for buying signals, one of the things I love about marketcharts.com is this -2 deviation on the standard deviation. You look at this, you come down here. When it's in this area, you're looking at general buying opportunities, and here you see the 50-day percentage of S&P 500 stocks above their 50-day rising. When they get to one standard deviation, you start getting tapped out. So is there some more upside momentum for the equity market? Absolutely. Now let's look at the percentage of S&P 500 stocks above their 200-day moving average, and you can see it's fighting here. It's running out of steam around a -1 standard deviation. So some potential risk off on the 200-day moving average chart here as you look to say that perhaps there's a small thrust higher on the based on the previous chart here going up to 1 standard deviation, but limited momentum on those percentage of stocks above their 200-day moving average. Let's look at the price and momentum screens. Now we're looking at the moving averages. We see the 21-day, 50, and 100. These are bullish. That means they're trending higher. They're rising. Momentum, this is your rate of change. Are those price increases speeding up or slowing down? So on the 21-day, we see they're bullish. It's increasing. 50-day flipping bearish, slowing down. 100-day slowing down. It's above all the key moving averages, which should be obvious as it rocketed higher, and all of the longer-term momentum trends are up, meaning it's above where it was 1, 3, 6, 9, and 12 months ago. Let's take a look at the charts because we've got some editing to do here. As you can see, and when we're looking at the 6-month chart of SPY, you notice the volume profile line, the heaviest point in the last 6 months is down here at 434. So what does that mean? The supply zone needs to be moved down. This is a big one, folks. You can see where all the buyers are at. You can tell based on the candlesticks there where the buyers have come in, so you can move your zone down. And I'm going to leave it here just for now because it looks pretty solid as it crossed over through here. Moving average is gapped up and has pretty much capped up in the overnight almost every night. Now, where is the next supply zone? Well, you can see there's a tiny one here around 452, but it didn't last. So where's the next one? I don't know, but I would suggest that this has probably got a little move higher, and then we'll see if those stocks under the 200-day moving average start acting as an anchor. All right, let's go on to, I'll switch over to the NASDAQ 100, and here we see the percentage of the NASDAQ 100 stocks above their 50-day moving average against the NASDAQ. And what do you see? It's starting to run into a bit of resistance. Now, you don't usually look at this chart as a view of support and resistance, but you can see the percentage of NASDAQ 100 stocks above their 50-day moving average is getting into a zone where they start to tire out. So perhaps a little more upside momentum on the NASDAQ as it could potentially get up to 1 standard deviation. Let's take a look. And just here, you can see it got down to a 3 standard deviation dip. Buyers are coming in. You see it gets down to this 2 or 3 standard deviation. People are going to buy this. So again, if you're kind of short term looking for entry points, this is one chart you can look at. How about the percentage of NASDAQ 100 stocks above their 200-day moving average? And there is a reason why this got bought. Well, it was below a 2 standard deviation event, but you'll notice it's not moving up real fast. You can see in times past it gets down here, it just starts to rocket higher. It's taking a slow grind. Now, that's not necessarily a bad thing. The question is, does this run out of steam? Let's take a look at the price and momentum signals. Again, moving averages all trending higher. Price above the moving averages, momentum building. So these are positive signs for NASDAQ. We see the 101-month momentum turning positive as it breaks above where it was a month ago. So those are all good signs. Let's take a look at QQQ, and there you can see that deep supply zone over the last 6 months. It looked like it was going to break down, but all of a sudden, I mean, just took off. And because it was kind of oversold according to market conditions, and when you're in a market cap weighted type of market, money is flowing into those few companies that are dominating those big indices such as the NASDAQ 100, and that elevates price. Where this stops, well, there's no sign of a supply zone building yet. I still think it's got a little more upward momentum, which is hard to believe when you see these vertical moves. But let's go look at small caps now. And what do we see in small caps? We're going to see a breakout here. Price now bullish across the board as they're trending higher. Momentum, though, is slowing down. That's kind of interesting on the Russell 2000. Above moving averages, momentum signals are now strong. And let's see, because remember, we said this needed to follow, and there it did. It broke out of that channel. Remember, if you're watching the regular weekly show, sometimes we look at the speculative positions, and speculators and hedge funds were deeply short. Well, it looks like they got squeezed out of here on this volume profile line, and finally a breakthrough. So there's definitely upward momentum there in the Russell 2000 IWM. Again, no sign of where that stops either. That's a problem when you go vertical into new all-time highs. There's no sign of where you stop. You have to look at perhaps some other signals. Let's look at the transportation sector, because the story we're going to get into is this doom loop. And what does the doom loop have to do with it? Well, when you start seeing certain things go up, namely bonds and the dollar start to worry. Let's take a look at transportation sector. We see price being bullish. Momentum just flipping bearish on the 50-day, slowing down there. 6 momentum turning to negative and rising. That is a good signal for IYT. This thing has gone ballistic as well. Let's take a look at it. Just everything is going vertical. And I think a lot of this has to do with passive investing and money flowing back into a smaller number of companies, driving these major indices higher, and with it, some of these smaller ETFs, relatively speaking, now back at its all-time highs. Will it find resistance up here? Well, probably in the short term, because there were definitely sellers up there. So could this put an end to the S&P and NASDAQ rising? Maybe not, because again, there's quite a few stocks sitting under 200-day moving average that traders can rotate into. So for now, I would be cautious of a potential double top here. But there's nothing to say that it's going to happen. That's the problem. I mean, the momentum behind this move is so powerful that there's no way to say for sure that. I mean, there wasn't like. I mean, look, there's not a lot of volume on these moves here to tell you that there's people coming in and unloading and selling. I mean, there's just nothing there to say that this can't keep going higher. But still, watch for a double top, as always could be a concern. Okay, on to the energy sector. Price bullish, momentum just slightly flipping bearish on the 21-day moving average as it slows. Everything looks green. I mean, that's the story of the U.S. equity market, is everything looks good, except until you look and see what that doom loop is telling you about. And we'll back off on this chart a bit to the 5 years. Remember, we kind of talked about how this would likely slow down here in this $58 to $60 range. Sure enough, what you're seeing is previous buyers going back to 2019, who got flushed out in that big drop during the pandemic, are now looking at exiting their positions, maybe rotating into other sectors. There's still potential upward momentum here. At least, I mean, everything's moving up. I mean, you got a nice deep base here on the volume profile. Let's take a look at crude. I'm sure its picture probably hasn't changed much. I mean, going back 2 years there, it's got a huge bottom base at that bottom, and you look at that with crude, $70 now, where your volume profiling is holding. A little potential topping pattern here. Could this come down and tag into this supply zone? So see, it's coming through the bottom end of this. If this doesn't hold, it's likely to get down into probably right here around $75. This is where you start to see shares traded, where people will come back and buy. You can see there's some support over here. There's the volume to match it. So it wouldn't surprise me to see crude come down to $75 before it tries to make another move higher. But again, it's subject to a potential doom loop as well. All right, let's take a look at financials. Financials love rising interest rates, at least investors do, because they think that means you and I are going to go out and borrow lots of money. Not seeing a ton of that, but we're seeing an increase of that. Price bullish on those momentum, now slowing across the board. Remains below its 9-day moving average, and that's not a big deal at all. Let's take a look at the financials, which have moved quite a bit higher. A nice strong base there on the volume profile line at 38. Let's zoom out to the 1-year chart. It kind of doesn't quite look like the small cap chart, but we see it went sideways and broke out. It's trying to hold its 21-day moving average. If bonds continue to rise, that will have a negative impact on financial stocks as lower interest rates indicate tighter financial conditions. So we'll take a look at that here pretty soon. So possible direction for financials, if they don't hold here, look for them to come down back to probably right here in 38, high 38, 39. You notice there's tons of support there, and that's where the volume picks up. So wouldn't be surprised to see a move lower here as bond prices look to go a bit higher. All right, let's switch on to the industrials. Price remains bullish. Momentum is bearish. Everything now green below. I mean, everything just keeps going higher. That is until it doesn't. How about the industrials here? Let's take a look. Let's zoom out. And they broke out to new all-time highs. Will they run into resistance here? Not a lot of trading volume at these upper areas, but let's see. There was some volume there. I mean, on the sideways, you don't see it, but there you see some volume picking up there. Sellers, not so much the volume here, but sellers. So there wasn't a lot of selling coming down into this move. Buyers came in there. You see buyers here. You don't see a lot of selling here. So nothing that says this will hold back. I mean, again, if the S&P and NASDAQ are going to move higher, well, industrials are going to go up too. And if we zoom in on the 6 months, you see that nice base sitting there. So breaking through what is definitely overhead resistance remains bullish. I mean, everything equity-wise here is just going to look bullish when you see those vertical moves. How about the utility sector? Almost unchanged. The 3-month momentum is now negative and falling, so it's below where it was last over 3 months, now rising above where it was 6 months ago. But there's so much volatility in utilities that doesn't necessarily mean anything. Let's zoom out to the 1-year chart. Let's go even further to 2 years, and you can see it's just running this trend line higher. You have to argue that the move for utilities is to the upside. It's making a series of higher highs, and that is a plus. Anytime you are looking at the markets, that tells you that other people are buying in at higher and higher levels, and it's sitting right in the top end of this volume profile line, looking like potentially a bullish flag where you get a flagpole and you get some consolidation. Where's your next move higher? Up here into 68, 69, possibly up into 70 to revisit its recent high. And investors will want to, of course, see that get above 72 like everything else, seeming to go higher. Let's move on to large gold miners. They got bullish too. Again, money is flushing into the markets here when they're not paying attention to the dollar or bonds. Price and momentum unchanged, now above all the key moving averages. 3-month momentum, 12-month momentum negative and rising. So that means they are moving up, folks, and that is a good sign if you're bullish on gold. And let's take a look at GDX and zoom out, because this thing was almost in big trouble. You can see it's still in a danger zone, and between 31 and say 34, it still does look like a topping pattern. If this thing gets rejected again here up at 33.50, well, it's a sign of the times of where this is headed. The bulls are trying to make a series of higher highs, and the bears are making a series of lower lows on the downside. So definitely a battle coming between the bulls and the bears here. What I think is likely to happen, I think the bulls are going to make a run at this 33.58. They're going to try to break through here. The question is, will they run into the 200-day moving average and run a steam. For the moment, the volume profile line, which has been acting as a strong notification of resistance, is now back in play. We know the sellers are above that line, which is at 32.24 and sitting right there at 33.50. So keep an eye on that. That not really a position on this side. If you're looking to, you almost need to wait till it breaks at 33.50, because that will get you that move higher that you're potentially looking for into the perhaps $35 range before you have another battle with the sellers. And you want to watch that 200-day moving average. Okay, let's go to emerging markets. Now, if you're bullish on gold, you got to be bullish on EEM. You want to see this going higher. It's below all key moving averages still. 3-month momentum now turning negative. It is as price is heading lower. As the 50-day moving average is trending down. This is not a good look for gold buyers at all. But let's take a look at emerging markets. We'll zoom out, and you can see. Now, some people will say that this is a really big bull flag, and it could be. If that's true, that means the dollar is headed lower. Highly unlikely. The overall trend of this, you look at the 100-day moving average trending down. It's below the 50-day. The 200-day is rolling over and going to act as overhead resistance. So what do I see here? You go to the 6-month chart, you see it gets rejected there. There's sellers. That tells you there's downward move here. Let's go to the 90-day, got rejected in the same spot, tells you there's downward pressure. Let's go to the 30-day chart, and so you see it's holding here on the 30-day, and that means it's going to be holding on the 10-day as well. So how do you interpret EEM? In the short term, you're going to get a move higher. That's what it's telling you. Seeing this right here is being bought, move higher. Doesn't mean it gets up to 52.52. Not necessarily. Could just run into the 100-day moving average and go lower. But there is a very short-term move likely, and you can see it in that volume profile. So that will help gold move higher. But the two run into resistance. Well, EEM's already telling you where gold is likely to head. High yield bonds flagging potential risk off move as price and momentum go bearish across the board. Still below all the key moving averages. Now below where it was 6 and 9 months ago as momentum breaks apart. Let's take a look at high yield, because if high yield is going down as the equity market's going up, that is dangerous. So look here, you see it's sitting under where it was. The volume profile line still well below there as price tries to shoot up with the equity market. So there is some bullishness there as it jumps. And I don't know why my thing said it's below the 50-day moving average unless I goof something up, and that is entirely possible. So above the 50-day moving average, above the 21-day moving average. Clearly I need to double check on that chart. I must have not looked at it right. Anyways, it's still finding some support here. Let's look at the 30-day chart, and you can see it blew through that. On the 10-day, look at the volume profile. You want to look to see here for some support. I'd like to see the volume profile down here, but it's up here on the 10-day. So what does that tell you where prices are headed? I would say you've got a bit higher prices moving, maybe up to the 88. Let's see. Yeah, I'd say you're going to see this thing try to shoot for 88 up here and see if it runs into sellers. So again, apologize for the screens down here being a little wrong. I must have I think I copied and pasted them over and goofed that up. How about long-term treasury bonds, TLT? Of course, we know Bond King's macro thesis, super bullish on this over the long phase, very long phase for some of you. How about above all the key moving averages now, or still is, price unchanged, momentum unchanged, 1 month momentum flipping positive. That's a good sign. So this is the first piece of your doom loop. If you see Treasury starting to rise, now you've got a problem, because treasuries and dollar rising together is deflationary. Now let's zoom out to the 1-year chart, and what do we see? The volume profile line jumped up to here. What is that telling you? The buyers that were buying all down here have been moving steadily higher. So that is bullish. And what do you see? Higher highs on the move up. So that is good. A nice little trend line there. Now let's go to the 2-year chart. And you can see the 2-year showing you where the volume profile in the 1-year used to be as it moves up. How about the 6-month? And there it is sitting right at it. So that could mean a short-term pull back on TLT. I don't doubt the sellers will try. Let's move up to the 90-day chart, and you can see it's holding there. How about the 30-day? There was your catalyst for TLT. If you were watching these dips and you saw that trend line rising and you saw it come up here and break this 30-day volume profile and retest it, then you knew there's a short-term move higher for sure. How about the 10-day? And you can see it right in there, catalyst higher. So look at those volume profile. If you're doing your short-term trades, it tells you a lot. There's your potential doom loop, because if we go back out to the 2-year chart, what do you see? A cup, a big long handle. You see a potential cup and handle on a bigger scale. So where is the breakout on TLT? It's at 152. Let's look at 30-year Treasury yields, and that's at 1825. You get a break on 1825, you're going to see this thing get down below 17. If that doesn't hold, well, you're looking at tightening financial conditions back down. I mean, it'll probably seize up a little bit at 1.4, but there'll be nothing really slowing it down to 1.2 once it gets some momentum behind it. So that is risk off speaking in TLT's world. How about we move on so we can look at the dollar, the other piece of the doom loop. Gold futures. We see the price on the 50-day trending down now above its 9-day moving average, above the 100-day, 3-month momentum, positive and rising. So some good indicators for gold here. Let's see if it's looking as good as the mining stocks or if it's flagging some danger. Now look at that. It got down here, looked like it was going to collapse, found a lot of buyers up into 1820. And what do we know is sitting at 1820? Yeah, sellers between 1820 and 1834. We've seen them 1, 2, 3 times. You want to see them again? Well, we'll see if they're still there. Look at the volume profile is holding nicely, supporting. You know, every city where you see this red bar, you know there's a lot of shares there, and if it breaks over that, you're going to get a little bit of a short squeeze and a move higher. You see it on the 30-day chart, and you see it on the 10-day chart. So the key now for those who are bullish on gold is you need to get past this 1831 level. That is your key place to break. If you can't get through that, well, it's going to come back down and retest 1800 again. How about silver? Is silver giving us a better picture? Price and momentum unchanged, now above the 9-day moving average. Everything else is unchanged. Let's see how silver looks, because it was in a danger zone. Let's zoom out to your chart. And what do we see? Came up here, and we talked about how this potentially was going to be where sellers were at, and now we're starting to see indications that this once former buy zone is becoming a sell zone. But it does, I know you're looking and say, hey, look, there's an inverse head and shoulder. There's your left shoulder, head, and right shoulder. Absolutely possible. Where does it have to break? Where's the neckline? 2483. If this is an inverse head and shoulders, it'll break that and move up to probably 28. So if you're looking at trading this, you want to wait until it breaks the neckline. If you're really anxious, you want to play it, you can try it sooner, but you want to wait till it breaks the neckline. That's the proper way, because these head and shoulder patterns can and often do get rejected. They are not as pretty of signals as you think. If you go back and look at the historical data on how often they play out, you can see it's tagging a downward trending 100-day moving average. So you notice the volume profile sitting there on the 6-month. Let's look at the 90-day, see where it is. Boom, right there. So again, it's suggesting that there is going to be a test of this 2480 coming. Let's look at the 30-day. Yep, I mean, you can see the silver is going to make a move. So look for it to make a move higher. The question is, can it get past the neckline? And the bulls are going to try. We'll see. You watch. They're going to try. All right, let's go on to the dollar, the last piece of the doom loop. Price now on the 21-day moving average, trending down, 1-month momentum negative and falling. Everything else looking fairly green. But again, if you see bonds continue to rise, which they should, looking at the charts, and then you see the dollar continuing to rise, that is your doom loop of deflation, and you got a problem. And so the dollar sitting here just I mean, you can tell it just wants to break out. And when it does, it's going to get up here to 97 fairly quick. It'll get to, high 96 and probably run into some sellers, but it wants to break out. You can see that. Let's look at UUP, find where the volume profile is. Look, there it is on, what are we on, the 2-year chart? 2 years, people have been buying the dollar. I mean, if you're bearish on the dollar, that should wake you up a little bit. Look at the 1-year chart. Solid buying of the dollar on the 1-year chart, so price above it. Again, if you're in equities, you got to be hedging with the dollar or bonds. And look, in the 90-day, above where it is in the 90-day. Let's go to 30 days. It came down and held that. So again, you're seeing all these signs. Look at the 10-day. So dollar could come down in the short term and revisit 25.24 on UUP. But overall picture for the dollar, let's look at the 2-year 24. Yeah, it could get down and 25.22. So it could come down a little bit, but I don't know that it comes down a whole lot. I mean, I think I said 24.20. I meant 25.24. It could come down a little bit, but the overall picture for the dollar is indeed bullish, my friends. And that, if that and TLT go, there's your doom loop. I'll see you on Monday. Thanks for watching. Bye now. The content of this video is provided as educational information only, is not intended to provide investment or other advice. It is not to be construed as a recommendation or solicitation by selling security, financial instrument, or participating in particular trading strategies. This video was prepared by Steven Van Metre. Personal capacity opinions expressed in this video do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.